How's it going? I'm Ryan, and today I'm going to go over the one trade that I took on NQ. It was a quick win. It was small size. I only took two contracts. The reason being was that I took this trade in the pre-market right before market opens, and I don't always necessarily have the best luck / trust price action in the pre-market, as we usually have a lot less volume, and I think that moves are a little bit less predictable in the pre-market. So I took this trade with only two contracts. It worked out perfectly, and in fact, it would have been a very nice winner had I had some size and runners, etc. But it is what it is. I played it a little safe because I didn't want to risk too much in the pre-market. Happened to work out. Before we get into the trade itself, let's take a look at some levels I was watching. So we're gonna hop over the 4-hour. I draw all my levels off the 4-hour. I love the 4-hour, and the way I'm looking, what I'm looking for to draw these levels is essentially areas where price is changing direction. So swing highs, swing lows, and then I put an emphasis on candle closes and opens as opposed to the wicks. The wicks, you can consider those as well, but you can probably see how I've drawn some of these, that I put more of an emphasis on candles closing and opening at a level as opposed to wicks. So the three levels that came into play today are this 20,487, we'll call it 20,578 or so, and 20,667. Like I said, these are just points where price has rejected when it's below it, or held as support when it's above it, and it's pretty obvious if you take a look at some of these. And as we draw these levels based off previous price action, we can extend that and see how well that they work out, right? This area, this level right here, specifically, we've had a lot of rejections up here. We had this rejection, this rejection, this rejection, this rejection. And then we see in the, I guess over the weekend, we see a rejection. And then today we see that we failed to close above that level. We wicked above it and kind of rejected as well. Same thing, this level held as support. It was previously resistance, and then acted as support when price is above it. We extend that out, and what do we see? We see price break above it, come back and retest it, hold it almost perfectly as support with that pre-market low before we move up. So that's a lot, but just figured I'd break that down. All right, so let's get into it. This is the 5-minute chart. We're looking at that price action. These are those same three levels that I called out on the 4-hour. So if I zoom out, these three levels right here. So coming into the day, when I opened the chart, we were somewhere, I'm gonna zoom in so we can kind of ignore, we're somewhere right in here is what I was looking at, right? And what I was watching is this level is valid. We have it as support here, we have it as support here. Once we break it, it acts as resistance, right? And then we get multiple rejections in the pre-market off this level, right? So here's one, we come up, test it, reject. Come up, test it, reject. Come up, test it, reject. And as we bounce off this lower level and then make our way to the top of this range, what am I seeing? I'm seeing the same kind of price action patterns that we have seen previous rejections at this exact same price point, right? We see this move up, we see this like red doji weak candle where we wick up, we test that level, but we close weak, and then we get that rejection off of it, right? And we have this move up, then we get what? Very bearish candle at a point where we're expecting a rejection, or at least expecting the possibility of a rejection, a point where we're thinking that it's a likelihood that it could happen, right? Based off of previous price action from the 4-hour chart and previous days or weeks, as well as the price action that we see just before, in the pre-market this morning. So as we come up and we form this, we have kind of a 3-bar play as well, where we have this candle, the following candle has a higher high and a higher low. Then the following candle has a lower high, lower low, right? So kind of a nice pivot candle pattern, or a rejection or a bounce, depending on which side of the aisle things are on. After seeing this, I entered a short position, so we can move this over. I entered a short position on this following candle. So pretty much once this candle opened, I saw this price action pattern at a level where we expect a rejection. All things are looking pretty solid for that. So entered a short position. Like I said, only two contracts. My stop was above this wick. Actually, I think I moved it just a little bit above this swing high. And my take profit was just below these wicks. So it was about a generally I do a 2-to-1 risk reward ratio, so that's a 15-point stop with a 30-point take profit for my first trim. But being that I only had 2 contracts, I wasn't going to leave a runner. It was take both contracts at 30 points if it gets there. Now, it did work out pretty perfectly, right? When the market opened, and this was prior to the market open, this was the market open. We got a nice dump. We got a nice rejection off that level. That filled my take profit. Quick 30-point win with 2 contracts. I felt confident in taking this trade because of previous price action. It's a level on a higher time frame. We boil it down to a lower time frame. We see that it is holding as support and acting as when price is above it, and acting as resistance when price is below it. We have, very recent rejections off of this area. And then we pair that with the price action that we're seeing currently at this area, and all we're doing is taking an educated guess, right? It's just a game of probabilities. You don't know exactly what price is going to do, but based off of what it has done in the past at this area and the way that it's looking, and just this pattern that it formed here, which is a very typical reversal pattern. Whenever you see that, you can look across and view that happening all over the place on price action. For example, we'll give the opposite example where we have a reversal here, right? We're selling down, then we get a big move to the upside. What happens right below it? Or excuse me, right at the beginning of that, right? We have this candle. We have a candle that has a lower low and a lower high, and then we break that, and we have a higher low, higher high, and then we get that move out. So just a very classic reversal pattern. You can see that here, right? We come down, forms that lower low, lower high, then we break that higher high, higher low, we get that big move up. So that's just very common. Doesn't always work, but more often than not, especially at an area of interest such as a level from a higher time frame, that gives some insight into what price might do in the short term. That's it, really. That's the one trade that I took. It happened to work out really well. Taking a trade in the pre-market is a bit of a gamble, so I don't always do that, which is why I sized pretty small for this trade. I only took 2 contracts as opposed to the usual 6. So only 1/3 of the size. Reason being, if I got stopped out, if the market opens and rips to the upside and stops me out, it's 2 contracts for 15 points. That's $60 loss. And we can handle that. We can handle that. If I get 1 winning trade, I'm up over $300 with 6 contracts, 30 points or so, and yeah. So it was a very safe trade, I should say. But that's it, really. That's all that there is to it. We don't really have the great volume example that we do during normal hours or when the market is open. But just price action alone and kind of the level was allowing me to take this trade. Now, if I do zoom in and we look at relative price action to, pre-market, aside from this, reversal that we got here where you'd expect some volume to happen with that big and that sharp of a move, we can see some volume playing a key part as well. So what I'm looking for is volume and price to kind of confirm a move. So we see that we have pretty high volume as we come up and test this level, which we'd expect, right? We expect that there to be sellers in this area because they have been before. It's an area that is rejected before, which means that there's people selling at this point. So as we move up, we see some pretty decent volume as we come into this area. That's expected. Then we get a weak candle here. A weak candle here that indicates some selling, and then it's even higher volume, just slightly, or maybe about the same amount of volume as this bullish candle that brought us here. So the same amount of volume that gave us this rejection. And then we get this doji here on a little bit higher volume, but lower than the previous 2. At this point, we kind of have a clear risk, right? We have this little swing high here before it dropped. We have this swing high here. We can place our stop loss just above these, right? So if it breaks above kind of like this area, didn't mean to do that. If it breaks above like this area, then we know that you know, it is broken above these swing highs, and it's probably likely to continue upwards. But if it doesn't break above this, then where is it likely to go? At least a little bit of a pullback. And where would I expect it to go based on previous price action? Well, I'd look at where we have some support. So I would say somewhere in here, maybe, right? We have this bounce here. We kind of have a few bounces here, but then we have these hammers here that held as support previously. So you could say anywhere from like this 544 to like up in here, maybe like 550. So kind of like a 6-point range where I'd expect some support. And that's where my take profit was. Coincidentally, I usually go for 30 points to take profit, and it just happened to end up working out like that in terms of where my take profit was. And yeah, we see that it worked out really well as the market opened. It sold off, and we hit that take profit, and that was all she wrote. The rest of the day, I didn't take any other trades because, well, this would have been pretty decent if I got a long here on the break and hold of this same level that we were rejecting off of, right? You can see that we have a massive move to the upside, very bullish candle. We have high volume on that as well, which is great. That's what we want to see. Then we get that retest and hold of that level on lower volume, showing that those sellers aren't really there to push this price back down. And then we get continuation up to the next level. Did not take that because I wanted to see a clean break above both of these. And the fact that we closed kind of right at this area where we rejected before didn't show me that we had strongly broken above that kind of selling point. It did work out really well. So this would have been a good trade in hindsight, but in the moment, I wanted to see us break these swing highs here and close strong above those, and then I would have looked for that pullback. But the fact that we didn't break above those and close kind of right at that area, you know, we had a really bullish close. The fact that it didn't have an upper wick really pretty much closed at the height of the candle, that's a good signal. But like I said, had that just been like a few points above, I probably would have taken this trade. But that was just me being picky. From there, we got a really big move up. We came up and held this level. You can see a little bit of a test. Almost had like a bull flag here where we broke out and set the high of the day. From there, sell off a little bit and then just chop around. It's kind of ugly. So that was the only trade I took. The only other trade that I would have, you know, liked was maybe this hold here. I like this hold better though. After we have this huge run up, it's a little bit extended. You see the sideways movement. You see that volume is pretty low as opposed to kind of this higher volume in here. So when we're seeing that low volume, I'm not expecting that to result in such a big move as you're not getting as many participants in the market. You know. That's it though. That's all. That's what I took today. The only other trades that I would have, you know, theoretically taken were probably this and the breakout of this bull flag. I would have taken it. And I was watching for it, but it was kind of slowly developing. I saw the price, or excuse me, volume was dropping, and then I just decided that I'd take my small win and be done for the day. That's it. I appreciate you watching. Thank you very much. Try to stream live regularly every single morning. Sometimes work gets in the way of that, but Monday through Friday should be live on this channel, live streaming the trades. We're trading on a demo account, so we're paper trading, trying to really dial things in. Then we're going to try to execute on a funded account and see if we can't get funded and start to make things pretty fun. All right, that's it. I hope you have a great day. Peace.